Since we're talking about young people and the fact that they perhaps get the best deal from the life insurance company, if you're young, you will be able to get a good policy at a very reasonable price. We have, I think, Ruchit writing in on exactly these lines. He's saying that what is the earliest age in which I can look at some sort of a term plan? And can I keep increasing my insurance cover with age? Again, phenomenal question. Thank you very much for asking this, Ruchit. And Rhishabh, that's really the thing, right? When you're 25, typically the last thing you're thinking about is your death, right? And how many people to cover and whether you'll be married or whether you'll have kids or not or whether dependents are your parents. You don't think about all these things. So it's a bit of a, a chicken and egg situation. So help us out here and, Ruchit's question too.
Absolutely. So the earliest you can buy term insurance is at the age of 18. Most insurance companies start offering a plan from the age of 18. But the challenge is that since it's an income replacement product, you should be working. So you should have an income stream coming in, which is most likely for an average individual at the age of around 21, 22. That's when they start earning. And hence, that's when they can start thinking of buying a term insurance. So,
oops, I didn't think of it. Sorry.
Absolutely. And I think, as Anand said, the younger you are, the cheaper are the premiums. So, and most people forget that life insurance is a long-term product where your premiums stay constant. So if you buy when you're younger, the premiums actually stay constant. So buying as soon as possible helps you out.
But also the other part of that question that, if I buy a term insurance, life insurance at 25 years, and I think that X amount is enough for me, as life gets more complex and I have more dependents getting added, I've taken a home loan and, lifestyle expenses are increasing, I realize that this is just not enough. The constant premium that I'm paying for X amount of cover. Then what do I do?
See, your financial planning is an evolving process as your life stage changes.
Yes, absolutely.
So what happens is at every stage, one needs to assess in terms of what is the kind of liability and obligations that one is kind of accumulating or acquiring during this journey. So his question is very valid. So in fact, it's a build-up concept. So you start with an X amount of life cover because that is relevant at that stage. As you progress, let's say you go in for a housing loan. So there is an obligation that is coming in. So which means then you want to take a note of, okay, fine, if something were to happen, what happens to this housing loan?
Correct.
I shouldn't be burdening my family. So that becomes the second evaluation stage where then he needs to evaluate whether the cover is adequate or not. Should I go for something more in terms of a pure term cover or a credit insurance product? One of the two. But net, am I taking care of the additional obligations that is coming in? So it's a very good question. Keep evaluating would be my advice.
But again, what are the steps? So suppose I've taken a home loan and, now I'm married and, I have a child. So obviously the obligations are increasing. Do I go back to the insurer and say, hey, I want to renegotiate terms of the policy? I don't even know if you can do that. How do I increase my cover? And what are the practices that different insurers deploy here? Rhishabh?
So there are two possibilities. If you're younger, I would advise that you buy a plan which has life stage benefits kind of added into your product. What does life stage benefit allow? If, let's say you get married, you have a kid, you buy a house, you have a home loan, you can do a top-up on your existing cover. So you can increase up to 50% of your cover. So let's say you bought a 1 crore cover, you can go up to 1.5 crore, 2 crore, depending on the plan you bought, basis the life stage benefit. If you haven't chosen that option, it's best that you buy a new term plan, you continue with the old plan, and you add a new top-up with a new premium that you end up paying.
That actually, we have to take a break, but that brings me to another important question. You said buy a new term plan. So does it mean that you don't stop your existing plan, or can you stop the existing policy and move to a totally new product, which with a higher coverage? What is advisable and what is feasible depending on it? Because, insurance can be fairly complex as well.
See, you would ideally not want to cancel your existing plan because, as we have seen, because of inflation, the premiums are only increasing with time, right? Since you bought an earlier cover, you would want to continue that plan for eternity. You can take an additional cover if you feel there are more liabilities that are coming your way so that they are kind of taken care of.
Mr. Anand, do you concur?
I confirm. It's a question of take the benefit of the plan when you're young. You got in at a X level. To cover the further obligation, go on to the next term plan because there will be a shift in premium rates and then continue taking the next phase.
Thanks for tuning in to CNBC TV 18, and for more news and updates, follow us on all the social media platforms.